Well, you may not know it, but September is Life Insurance Awareness Month. The loss of a loved one is not something anyone likes to consider, leaving many families financially unprepared. Here to fill us in from Barnum Financial Group, Mike Lynch is back. Welcome back, Mike. Thanks for coming in.
Well, it's always good to be here, Sonia.
First of all, tell us about Life Insurance Awareness Month. I didn't realize that existed. How did this all come about?
Well, now you know. It came about because it's designed really to get people to take a step back, pause, and ask themselves the important but oftentimes uncomfortable question. What would happen to people that loved and depended on them if they weren't around? Would their mortgage still get paid? Would they still go to college? Would they be able to stay in their world? The good news, Sonia, is about 4 out of 5 households have some type of insurance, life insurance. The bad news is it's often inadequate, the wrong kind, and a little bit too flimsy. Life insurance, purchasing life insurance, is an act of love. We want to give people the chance to show their love for their family.
So everyone's situation is different. How do you determine how much life insurance you need?
Well, typically, Sonia, we're going to design a plan based on a family's needs. So everybody's different, but there are some commonalities. So let's say you and I are married, we're a young family, you're here working, making the big dollars, I'm at home raising the kids, right?
Okay.
So what we do is we'd sit down and say, look, Sonia, you're a money machine. So if you were to pass away, you're a money machine, right? You're
well,
supporting
I like
the family.
this scenario, okay.
So if you're to pass away, what do we want? Do we want the mortgage paid off? The kids probably still need to go to college, and I'm going to still need to retire. Then we're going to have some difficult questions. Do you want me to be able to stay home with the kids, or am I going to have to go back to work, and if so, more money for the kids? So we design it really to replace income to keep families in their world.
So the situation must be different, say, for empty nesters.
Yeah, you know, when people, once they've grown up and they've raised their kids or their kids are grown, a lot of people say they don't have a need for life insurance anymore. Oftentimes I disagree. First, we're going to use it for these 3 reasons, or 4 reasons. First, we're going to use it to protect the retirement accounts. Somebody gets sick, it costs a lot of money. We always protect the innocent with life insurance. The money's gone to the hospital, the nursing home. Now we have tax-free life insurance. Replace some money for the spouse, the surviving spouse. Second, always a loss of income upon death. Social Security is reduced. Pensions are reduced. So we're going to use it to replace income. And finally, you know, we want to have nice, dignified funerals, so we use it for final expenses. I like to say this: dying's bad enough. You don't want to do it for free.
Good point. What are some of the most common mistakes you see made when it comes to life insurance?
Well, the mistakes are really boiled down to not working with the professional, buying too little or none at all private insurance, buying the wrong kind, or not enough. Life insurance is a little mistake, big mistake issue. If you buy it but you don't need it, you've made a little mistake. Now, we can fix that mistake by giving your premium back. We can design a plan to fix a mistake, but let's just say you made a little mistake. But if you need it and you don't have it, it's a big, irreparable mistake. But the other one is this: reinsure your income because you're the money machine.
Right.
But I'm a tax shelter to you, providing for the kids. So you have to insure the stay-at-home spouse. I need insurance because if I pass and you're working, one or 2 things happens. You're either going to have to work less and earn less to take care of the kids yourself. By the way, it's not easy what I do at home for us.
Sure, they all say that, whatever.
Or you're going to have to hire a team of nannies, and they're expensive because I'm that good. So
how did you make out on this deal is what I want to know, marrying a money machine like me?
Well, I'm working hard at home.
Right.
I'm working hard at home for it. I'm working for it.
What about employer benefits? Does that often include life insurance? I think maybe a lot of people aren't aware.
You know, that's the check-a-box issue. So I like to say this with employer benefits. It's like the first 6 grades of your education. So it's a good place to start, but you don't want to end there. So typically, an employer is going to give you $50,000 or some multiple of life. The average American has 3.7 years of life, but that's not enough in most cases. So, for example, in our situation, if you were to die with 3.7 years of life insurance on you, you've got to ask yourself how long you plan on being dead, because you're going to have to come back and make money, and that's a pretty hard thing to do.
So you have to figure out how much life insurance you need, what kind of life insurance you need, because that's individualized.
Yes. And so that's why you work with a professional. You sit down and we design custom plans for you. You know, you don't have to ask. I'll say the good news. People say, well, how much does all this cost? And that's the good news. The price is a solution, not the problem. Typically, we can design a customized plan to protect an entire family's income for about 1 to 2%. So in simple terms, we're taking 1 or 2 penny out of a dollar to protect the other 99 cents. And that's tremendous. If you want it back, we can do a little more robust plans to where we design it that all the money comes back regardless of whether you live or you die.
So you can cater it to the person financially speaking as well. I mean, we don't have to say that these are tough financial times. They have been tough times. What do you say to people who tell you they just can't afford it right now?
But we can almost always afford it. Like on the way in today, cars. We passed cars that were probably $5,000 cars, and we passed cars that were probably $50,000 cars. And so they all got people from point A to point B where they needed to go. It's the same thing with investments, the same thing with insurance. The key is to sit with the professional, have them ask the questions, design a customized plan for you, and fit in any budget, because we can fit it in any budget. I'd say to this, if you can't afford the insurance, that's where you really need it, because you pay for it one way or the other. You pay a little if you live, but if you die, your family's going to pay a lot.
Make a little mistake, not a big mistake.
Make a little
Mike
mistake,
Lynch.
not a big mistake.
If you want more information, you can contact Barnum Financial Group. Just come to our website, WTNH.com. Click on the Connecticut Style link. We will have the info there. There it is on your screen, the phone number, the website. Mike Lynch, thanks again. We appreciate it.